Folks, welcome back. I have your latest home prices and insights for the City of Toronto for week ending November 23rd, 2022. I read an article, the heading read, "Has the Canadian real estate market adjusted to the higher cost of borrowing?" I read the article. It was kind of vague, but it was a very interesting title, so I want to answer that from my perspective. So, has the Canadian real estate market adjusted to the higher cost of borrowing? I'm not speaking about all of Canada. I'm just talking about the GTA where I have experience in. Well, for March, April, and June, we had 3 rate increases. Quarter point, half a point, half a point. That's March, April, June. So a total of 1.25%, the Bank of Canada increased their rates. We know after the peak, so January, February being the peak, it's after that that we saw drastic price reductions in average sold prices and in median prices and street level. We know houses were selling 10, 15, 20% lower than what they were selling for at the peak. So for March, April, and June, yes, the increased rates caused a massive decrease in average sold prices. The next 3 rate increases were July, September, and October. Now these were the bigger rate increases. July 1%, September 3/4 of a point, and October half a point, for a total of 2.25%. So here's where we've seen the biggest rate increases. What about prices? What happened? Well, we know that the summer, July and August, and the fall, prices really haven't changed that much. So if you're talking about has the increased, have prices of the real estate market adjusted to the increased borrowing costs, if you're talking about the first half of the year, the answer is pretty clear, yes. If you're talking about the second part of the year, summer, fall, no. And that's just from the charts that we put up every day, which we're going to bring up shortly. But let me give you another perspective. We've helped many buyers through the course of the summer and now into the fall. Those people that bought, they've bought. But there were some that we didn't yet buy for, and their pre-approval expired, and they've been pre-approved now again at the higher rate. And we know, and this is physically working with buyers, the properties and neighborhoods we were previously looking at with their, we'll say their first pre-approval, with their second pre-approval at the higher borrowing costs, they can't afford those neighborhoods anymore. So those prices have not adjusted with the higher borrowing costs. And that's experience, we'll call it street level experience. We could see it clearly with the buyers we're looking at. Home prices have not adjusted now recently to the last few rate hikes. Will they? Will they not? Time will tell. I do know, because of the way we analyze the numbers, you'll most likely see it and hear about it here first. If you think this video can help somebody you know, please pass it along. Let's get into the numbers. If you want to speak with me about your real estate situation, selling, buying, it's really simple. Below this video in the description, there's a link to my calendar. Click on that, book a time that's convenient for you. This way I'll know ahead of time and I'll make sure my schedule is organized so we can talk about whatever's on your mind. So for the next few months, numbers, real estate prices are going to look terrible. Now, the perspective I'm talking about is year-over-year review. This time last year, prices were heading up. This year, prices are the same or heading down. So as the weeks passed, leading into December, January, February, the gap between last year's price and this year's price excuse me, that gap, the percentage difference, is going to get bigger and bigger. Now this is a year-over-year review, and it's an interesting stat to look at, especially if you're sitting on the sideline or you're just interested in real estate, you're not looking to buy or sell. It's an interesting stat to look at, but understand it's just going to get worse and worse before it kind of comes back in line. If you are looking to buy or sell, more important than what happened a year ago is what's happening right now and the trends that we're on right now. We're going to show you that shortly. Here we have the City of Toronto. This is for just the City of Toronto, so there's no suburbs in these numbers, and it's just for detached properties only. 109 detached properties were sold. 17 of those were at $2 million or more. Average sold price has been coming down over the last few weeks. It's now sitting at $1,479,000. Now, I have here weekly data broken down for a year, and $1,479,000, it's not the lowest week we've had in average sold price, but it is one of the lowest weeks we've had in the course of the year. Remember, earlier I said last year prices were going up. This year they're either staying the same or coming down. Well, big difference. We're going to see the gap. Here's where it's kind of starting. 2% lower than last year, 16%, 15%. For this week, week ending November 23rd, average sold price is 20% lower than last year's average sold price. That's a big number, 20%. The median price is 15% lower than last year's median price. Now the dotted line, that's a 4-week moving average. It makes it simpler it makes it a bit easier to spot a trend. When you look at numbers week by week, oftentimes you'll see the peaks and the valleys. The 4-week moving average kind of smoothens that out, again, making it easier to spot a trend. And if we look at, say, the average sold price for the 4-week moving average, prices really haven't changed that much. For the median, it looks like prices have come down slightly. Now I'm looking at a 3-month span here ending November 23rd. So prices really haven't changed that much for detached properties in the City of Toronto over the last 3 months. Sales, year-to-date sales, January 1st to November 23rd, we have 32% fewer sales this year versus same time last year. Of the 109, only 16% sold at list price or more. That's not a lot. Even as the market is, we'll say, down, we've been hovering in the 30% or so selling at list price or more. Well, last week it was 16. Same time last year, it's a different world, 74% were selling at list price or more. Listings year to date, we have 9% fewer listings this year of detached properties versus last year. And months of inventory climbed up just a little bit. We're sitting at 2.5 months of inventory, and 22 is the average days on market. So that's all of Toronto. Let's break it down a little bit between West, Central, and East. Central Toronto, average sold price went up. For East and West, average sold price has come down. Here's West Toronto. 47 detached properties were sold. 4 of those, only 4 properties sold at $2 million or more. Average sold price is one of the lowest we've seen all year. Not the lowest, but pretty close. $1,310,000 is the average sold price of properties sold in West Toronto for week ending November 23rd. $1,310,000 is 10% lower than last year's average sold price, and the median price of $1,135,000 is 13% lower than last year's median price. Here's months of inventory, came down a little bit, sitting at 2.2 months of inventory. Central Toronto, 28 detached properties were sold. That's not a lot. Sales have, over the last few weeks, been coming down. So 28 detached properties were sold. 12 of those were at $2 million or more. Average sold price climbed up a little bit, sitting at $2,186,000. That's for Central Toronto. $2,186,000 is 20% lower than last year's average sold price. And if you think 20% is a lot, the median price is 30% lower than last year's median price. Median price is sitting at $1,639,000. Months of inventory climbed up, sitting at 3.9 months of inventory. It's very much a balanced market, especially in Central Toronto. Here's East Toronto. 34 detached properties were sold. Only one was at $2 million or more. Average sold price is $1,130,000, which is the lowest we've seen, at the very least, over the course of the 12 months, the 1 year that I have on the board here. So $1,130,000, which is 18% lower than last year's average sold price. The median price of $1,038,000, so we're just over $1 million for the median price. That's 19% lower than last year's median price. When we look at the 4-week moving average over the course of 3 months, both for average price and median price, for East Toronto, kind of looks like prices have been coming down over the last 3 months. Months of inventory from East Toronto climbed up a little bit, sitting at 1.7 months of inventory. So here's a breakdown, West, Central, and East. Now, they really are 3 different worlds. East Toronto almost always has the lowest average sold price and the lowest median price. However, you also have the highest percentage of properties selling at list price or more. East Toronto 59%, West Toronto 9%, and Central Toronto 25%. So 59%, more than half the properties sold in East Toronto sold at list price or more. It has also the most activity, usually, not this week, but usually. Here's a quick look at semis. 37 semi-detached properties were sold. 5 of those were at $1.5 million or more. Average sold price for semis is $1,203,000. $1,203,000 is 16% lower than last year's average sold price. The median price for semis of $1,130,000 is 2% lower than last year's median price. Months of inventory stayed the same at 1.5. Townhouses. There's such sales are so low with townhouses. We sold only 16, the previous week 15, then 7. I mean, sales are so low, and the span of pricing of townhouses is so vast that you get these huge peaks and valleys. So 16 were sold. 2 of those were at $1.5 million or more. Average sold price is sitting at $1,171,000, which is 20% lower than last year's average sold price, and the median price is 6% lower than last year's median price. Months of inventory came down just by 0.1, is now sitting at 1.5 months of inventory. Let's look at condos. Sales went up. 170 condos were sold. 17 of those were at $1 million or more. Average sold price came down a little bit, sitting at $732,000. $732,000 is 7% lower than last year's average sold price. The median price of $634,000 is 3% lower than last year's median price. Let's look quickly at the 4-week moving average. Both for average sold price and median price, looks like over the span of 3 months, slightly average price and median price are trending downwards. Sales year to date, we have 35% fewer condo sales this year versus last year. Of the 170, only 10% sold at list price or low or higher. 10% is quite low. We have been hovering in the 20s 10% is lower than what we've seen in a long, long time. Listings, we have 10% fewer listings this year versus last year, year to date. Months of inventory sitting at 3.7 for condos in the city of Toronto. Here's a quick summary of months of inventory. Look, it's very much a balanced market out there. I know many times the months of inventory don't always show that, and I wish they did. It'd be a lot easier to explain and for everybody to understand. But when we are coming from a peak, it seems almost so long ago now because we've been in this market for a while. But when we were sitting at 0.2, 0.3, 0.4 months of inventory, and now we're at 2.5 or 1.7, it's a different world. It's very much, it feels, even if the numbers don't always show it, very much a very much a balanced market. I hope you found this information helpful. Thanks for watching. Have a great day.